My name is Artūrs Breicis, I'm Certified Tax Advisor in Latvia. And in today's video I'm going to tell you about taxation of cross-border construction services and materials in Latvia. This is quite a frequent topic which we face in our practice because there are many construction sites, projects where the foreign companies are coming to Latvia and doing something by selling the construction materials or doing construction services, and sometimes repeating the projects, and that's why this involves a number of tax implications. And depending on the volume, depending on the scope of the works done, the tax implications may slightly or quite considerably differ. And that's why we are going to talk about today is about VAT, permanent establishment, and payroll taxes. To make it more understandable and more down to earth, we have divided the presentation of this video into three situations. One is the supply of construction materials, where the EU seller is selling the construction materials to Latvian purchaser, and this Latvian purchaser may be with or without VAT number, and specialties, specific cases, assembly and installation, which we will see separately. The second situation is when EU seller is supplying construction services in Latvia, doing actually construction services here, and again Latvian purchaser may be with or without VAT number. And the last situation is long-term construction services. We call it long-term, but actually it's more related to existence of the permanent establishment, which usually starts after 6 or sometimes 9 months. Okay, this is the content. Let's get started. This is supply of construction materials. And we will start with this example, where is a supplier from Poland. It's VAT payer, because it's difficult to imagine a supplier of construction materials which wouldn't be a VAT payer. However, the purchaser in Latvia may be a VAT payer and maybe is non-payer. It depends on the size of the company, and sometimes small companies are not required to register for VAT purposes if the purchases of EU acquisitions are less than 10,000 euros. We will see it later. So there might be two situations: is VAT payer or not? The first situation, when a purchaser is a VAT payer, first we'll look at the Polish perspective, and from Polish perspective, the sale to another member state is qualified as intercommunicate supply, which is zero rated for VAT in Poland. So, but in order to apply zero rated VAT, the Polish supplier should fulfill two things. First of all, it has to obtain some evidence that Latvian purchaser has a valid VAT number. Yes, and the second is that the goods should be actually transported from Poland to Latvia, and supplier must have the proper documentation as a proof in order to apply this zero-rated VAT. So basically two things. The place of supply is where the goods start shipping, so it's Poland, and shipped to Latvia, other member state, and requirements for zero-rated VAT are fulfilled. So that's why this is an intercommunity supply. From purchaser's perspective, it's intercommunity acquisition, and Latvian purchaser will self-account VAT, 21% as output VAT, and simultaneously will deduct it or recover it as input VAT. So basically, if the value is 100,000 of the goods, then Latvian VAT payer will calculate 21% as output and 21% as input. Yes, and the difference is zero. So payment to budget, Latvian state budget, is zero. Okay, the next situation, if we assume that the Latvian purchaser is non-VAT payer, then this means that since place of supply is where the goods starts moving. It's Poland, but there are no requirements for zero-rated VAT applied. This means that local VAT 23% should be applicable in this case, and Polish supplier will invoice Latvian company like 1,000 plus 23% VAT as domestic sale. Latvian purchaser will not be, since it's not payer, so it will not be required like eligible to recover this VAT paid for Polish company, and actually this will increase expenses by 23%. Yes, so basically, if the value of purchases would be were 10,000 or more, then the purchaser would have to register as VAT payer, and then the previously intercommunity sale would apply. But in this case, if, for example, if the value is, let's say, 9,000 or less, or even 9,999. So anyway, the VAT it is not required to register, but Poland may apply 23% Polish VAT. Of course, for a Polish supplier, it is recommended that Polish supplier also expresses the interest whether the purchaser should or shouldn't register as VAT payer in order to be VAT correctly applied from both sides, because if here Latvian company fails to register as VAT, the Polish supplier will apply 23%, but still it will not be correct. Of course, from Polish perspective, it will be correct, but if we take both sides, then it's not kind of the right thing. The right thing would be that supplier says, okay, you are purchasing from me, like, I don't know, for 15,000, so you are eligible, required to register, then please register as VAT payer, and then I will sell you these goods for this amount. So, but this is just a recommendation. Still, Polish supplier may just continue treating it as a domestic sale and applying the 23% Polish tax. Okay, so. The specific exception is about assembly and installation. So basic concept is that assembly and installation is provided on the grounds in Latvia. So this means that the place of supply would be Latvia, and theoretically supplier should have to register in Latvia as VAT payer. But the Latvian VAT Act provides an exception from this rule, and it states basically that the taxable that if the person of another member state supplies goods to person who is not a taxable person or is an unregistered taxable person, and these goods are assembled and installed, then this taxable person of another member state should register as VAT payer. So this means that supplier who is intended to sell and install or assemble the goods in Latvia, first of all, the supplier has to find out whether purchaser is registered or not, and if it's non-VAT payer, then VAT non-payer, then supplier has to register in Latvia, obtain Latvian VAT number, and then charge supplier these Latvian 21%. So here will be the intercommunity supply between supplier VAT number in Poland and VAT number in Latvia, intercommunity supply, and VAT number in Latvia will apply 21% VAT on this value of the transaction. This is in case if the purchaser is non-VAT payer. In case if purchaser is VAT payer, then the normal conditions apply regarding the as it was intercommunity supply, which is zero rated for VAT. So then applies all the things which we discussed before. as for intercommunity supply. So what you should remember is that if you are making assembly and installation, then you have to supply the goods to the non-payer, and there is a risk that you have to register as VAT payer in Latvia before starting the supply. Okay, so the next section is short-term construction services. And by short-term construction services, we mean all the services which are related to some real estate in Latvia. So, because under Latvian VAT law, Article 25, the place of supply of services related to real estate is the place where real estate is situated. This means that if you start doing some construction work in Latvia, you have to immediately register as VAT payer in Latvia. The next thing which you should know is that the Latvian VAT Act provides a special regime for construction services, basically, which means that there's a kind of reverse charge mechanism where the liability to pay VAT is shifted from supplier to a purchaser. So this means that supplier issues invoice for construction services without VAT, but the recipient of services self-accounts and pays into state budget or deducts input VAT as a recipient of services under reverse charge rule. So what does it mean in practice? In example, in this drawing, you can see that here are the supplier in Poland, which supplies goods from Poland to its VAT number in Latvia, and this is regarded as intercommunity acquisition. Supply and acquisition. Here's acquisition. So this means that Latvian VAT number calculates the output VAT and deducts it fully. So basically, input and output is the result is zero. But for the supplied construction services, this VAT number charges purchaser for the total amount of the contracted fee without applying VAT. So here, for example, if here are construction materials 1,000 euros, so supplier's VAT number in Latvia accounts it as input VAT, output 210, input 210. Its result is zero. Then a construction is made, and here is without VAT. The invoice is, for example, 1,000 for goods, and for services 500. It's 1,500, and its X goes without VAT. Without VAT, and the purchaser accounts VAT on the acquired business. So it's output, not business, acquired services. Output is 21% out of 100,500, and input is the same amount, 21% of 1,500. So, provided that the purchaser is fully taxable, has taxable supplies, and is eligible for full recovery of input VAT. So basically, this structure allows to shift the liability to pay tax, the VAT, to the purchaser. And supplier's VAT number is actually Polish company will have to submit returns, and usually this return will be that the VAT will be overpaid, because there should be also other expenses which is made on behalf of this Latvian VAT number, and VAT paid would be recovered. So this means that supplier will submit tax return in Latvia, where usually it will be in VAT overpaid position, and will be eligible to ask for a refund from Latvian authority. A few words about payroll taxes. Here, in short-term assignments, assume that some expatriates are coming from foreign contractor and works here for a short period, then usually those employees, if they are getting paid by foreign company and working here on short-term period, usually it doesn't attract local payroll taxes. And usually the criteria for this is 183 days. So if they are working less than these days, then this means that they are maintaining the payroll on this in home country. However, if foreign company attracts local employees, which are living and working here in Latvia, then of course these employees are liable for payroll taxes from the first day. Speaking about the payroll, of course, each situation should be evaluated on its own kind of circumstances, and I'm trying to give you just a overall principles which sometimes are subject to exceptions, but usually so these are criteria which should be considered. The duration of stay, also where the employee is a resident, and also who is paying the kind of remuneration. Okay, so next is long-term construction services, and as we discussed, it's not like long-term in terms that it takes several years, rather than long-term that's associated this so-called permanent establishments concept, and permanent establishment is considered to be if the construction services lasts, like building site construction project lasts more than 6 to 9 months usually. Exact number should be established by a particular double tax treaty. What is important if we speak about permanent establishment, it's important to note that it is based on actual facts, not like on when you decide to register a permanent establishment. So if you, for example, if you have worked in Latvia construction site for 10 months, let's say, but you didn't know about this permanent establishment, that doesn't mean that you are kind of that you didn't have this permanent establishment. By fact, you had this permanent establishment, you had to register it, and now you have to do it retroactively and pay taxes retroactively on behalf of this permanent establishment. That's why it is important that if you identify as this PE, called P, then it is recommended that you register it and start doing all the things from the very beginning, because doing it afterwards retroactively will make more trouble, more time, and actually more money in terms of late payment fees, penalties, and so on. So if you have this permanent establishment fact, then this involves additional corporate income tax. You're becoming, the supplier is becoming corporate income taxpayer in Latvia, and most likely also payroll taxation, because all the payroll or employees which will be considered to be employed by the permanent establishment will have to pay taxes in Latvia. Regarding the VAT, all that stays the same, all which we discussed is the same actually for this case. The only difference is that in case of permanent establishment, this kind of this taxpayer will not be just a VAT number, but will be a corporate income taxpayer, which simultaneously is also an employer and also a VAT payer. So in this picture is depicted actually almost the same as before, but instead of VAT number in Latvia, here supplier has not only VAT number, but also VAT number. It has also permanent establishment, so it becomes to be a corporate income taxpayer, and also an employer or payroll taxpayer. Okay, so basically all this regarding VAT, everything we discussed before stays in the same. I will not repeat it, so it doesn't. So everything is the same regarding VAT, special regime, and so on. But what comes in addition? It's corporate income tax, and here is the problem about the corporate. There are actually two problems. The one problem is how to allocate the profit, which is taxable, in the hands of permanent establishment. It's called the attribution of profits, and the answer to this question is that this permanent establishment should be regarded as it were a separate company. It's not a permanent establishment, but a separate company. So this means that those sales between transactions between supplier and permanent establishment should be at arm's length or at market value. So basic premise is here that you have to prove that those transactions here is at arm's value. Now this is quite. Principle is simple, but in practice, sometimes it's difficult to allocate, to set how usually what is the right value, and then there is no one answer to this. That's why we are not getting into detail here, but just saying that this, for tax purposes, of course, legally it's one company, but for tax purposes, we should pretend that those two companies are different, and they should make their relationship as if they were totally different and independent companies. Yes, this is one thing. The second thing which follows from this interesting or nice corporate income tax principle which is different from other countries except Estonia, that corporate income tax is payable only when dividends are distributed or the other expenses which are for example, business expenses are distributed. Then the problem may arise if the purchaser, for example, is paying a service fee directly to Poland. Yes, then someone may say, the tax authority may say that, for example, the purchaser has paid here to Poland, but not to permanent establishment. So this could be regarded as distribution of profits, that the profit has been shifted out of Latvia, and therefore please be so kind and pay tax on the service fee, which is paid out of Latvia. So that's why, in order to address this question, there are basically preferable ways that permanent establishment establishes bank account, which is in its own behalf, in its name. So this bank account is kind of related to this permanent establishment. Yes, and then permanent establishment bank account accounts all the income and expenses and shows that the profit is still in Latvia and is not distributed. But in case if there is no such a bank account, then the bank account could be opened by there's only one bank account or several or just bank account outside Latvia and in the hands of supplier. Then in order to avoid the tax authorities would say that this is a profit distribution, then this money outcome kind of outflow should be properly accounted in the books of permanent establishment in order to show that this amount has been, that the supplier owes this amount and the profit is still in the hands of a permanent establishment. Otherwise, and this could be done by properly accounting and then producing the financial statements of a permanent establishment showing that the profit is still here and it hasn't been distributed. Okay, so this is another. The short and easy solution is separate bank account, and if bank account is not separate, then solution should be in the books of permanent establishment. Okay, and the last thing which sometimes is overlooked is payroll taxes, and the point here is that the double tax treaty expressly says that the persons who are remunerated or employed by permanent establishment should be taxed in this country where permanent establishment is. That's why even if the supplier has sent some employees to Latvia on short-term assignment, and if those costs are borne by permanent establishment, then there is a high risk that this remuneration paid to those people should be subject to Latvian payroll taxes. This should be taken into consideration when you structure the relationship and settlement between the company company and a permanent establishment, and if you allocate some expenses, then this should be done with care, but in any way, you cannot just allocate the full salaries of the employees. Then, if you do that, then there is a very high risk that all the salaries are subject to payroll tax in Latvia. So that's why this should be taken into consideration and bear in mind when you're planning those assignments and sending. Moving of employees between the countries. Speaking about social tax, here is a little bit different. Is that there are international treaties that says that employee has to pay who should be insured in one country and pay social contributions in one country, and in order to do that, the employee has to receive so-called A1 certificates, which allows to pay social contributions in one country for up to 2 years. So if you are a Polish company, for example, is sending employees here in Latvia, then they have to get those A1 certificates in order to remain insured in Poland. Okay, that was this. I wanted to discuss in this video, to tell you about in this video. And if you have some questions, please do not hesitate to contact us. We are specializing on those questions, tax questions, in helping clients to structure the transactions and also ensuring compliance. So hope to see you soon. Goodbye.